Hello friends, today we'll be seeing 4 chapters in Direct Tax CS Executive new syllabus for December 19. The 4 chapters are Advanced Tax, TDS, TCS and Assessment Procedure. Okay, first let's start with Advanced Tax. Before going to the lecture, I would like to say these are revisionary videos. The focus on this is mainly MCQ. You guys do not have a holiday for this. You'll be having only single day in which you have to revise both direct tax and indirect tax. So this is a try by which you can revise the whole DT in a very less time. I'll be releasing the whole notes once the videos are over. That will be really helpful to you, which you have to go through every day. Okay, so now advanced tax portion. What is advanced tax? Advanced tax is the amount which is payable, the net payable amount after deducting the TDS deducted from others. The amount should be more than or equal to 10,000 rupees or more. So that is termed as advanced tax. Advanced tax is a payment of tax which is also said as pay as you earn scheme. Okay. So now advanced tax is not applicable only on two cases, which is capital gain and casual income, because in that cases we will not have an idea about what will be the assessed income, because assessed income is only a estimation. So since we'll not be knowing unless and until we sell it or we receive a casual income, we need not pay advance tax on that. But when received, we have to pay advance tax on it on or before March 15. This is the point from that. Okay. So what is advance tax? Final tax payable after TDS is 10,000. After deducting TDS, the amount is 10,000 or more. This is also known as pay as you earn income, which may come in MCQ. Exception is capital gain and casual income. Next comes self-assessment tax. What is self-assessment tax? Means a balance tax payable on the returned income after adjusting TDS and advance tax is a self-assessment tax. Self-assessment tax is also applicable to persons who opt for 44AD and 44ADA. What is 44AD? What is 44ADA? Those are presumptive taxation. We'll be covering those in PGBP. Just remember that the advance tax payable is also covered for persons covered under 44AD and 44ADA. Then to whom this is not applicable? To resident senior citizen. By senior citizen itself, in most of the sections in income tax, we mean only resident senior citizens. Okay. Apart from this, I'll also attach a single handwritten notes for advance tax. In that notes, you have to verify this when we am taking this. Okay, so for all SSC, what is the due date for paying advance tax and how much is the minimum percentage of advance tax which is to be paid? There are 4 installments on a quarterly basis starting from June 15. So it is like on or before June 15, September 15, December 15, March 15. The minimum percentage of advance tax which is to be paid are 15%, 45%, 75% and 100%. Okay, so this is due date. Now comes the penalty. What if we haven't paid? There are 3 sections in which it is really confused. Again, I have given it in a handwritten note which you can verify while I'm taking this video, when you are hearing this video. So 234A, 234B, 234C. 234A, when it is paid, when you haven't filed the return of income and the return and the advance amount is still due. 234B comes where you haven't paid the advance tax or you have paid less amount, that is less than 90% of the assessed amount. 234C comes only when you have paid the advance tax. So 234C is a section comes only when you have paid the advance tax, but you haven't paid proper. What do you mean by it is not proper? You haven't paid the amount of installment which is due. Okay, so 234A comes when return is not filed and still it is due. 234B comes when you haven't paid the advance tax or you have paid only 90% of the advance tax is not paid. Where minimum 90% of the advance tax has to be paid. When it is not paid, 234C comes into play. 234C is where interest paid but it is not as per installment due. Now the percentage is same for everything. It is 1% per month or part of a month. What do you mean by part of a month? Even if it is getting delayed on the one day of the next month, you have to pay the interest for the whole month. That is what it means. So for all 3, it is 1% per month or part of a month. Now we have to calculate for a period. So there should be a from date, there should be a to date. To date obviously till it is due. Now what is a from date? For first case, it is when return is not filed. So immediately the next date from the date from which the return has fallen due. If it is falling due on 31st July, we have to calculate it from 1st August. Okay, for 234B, it is from the 1st April of the relevant assessment year. Okay, 1st April. 234C is only up to 31st March. So till 31st March is 234C. After 31st March, 234C will not come. 234B will come into play, which is 1st April of relevant assessment year. Okay, so 234A, B, C, this is done. For certain cases, 234C is not applicable. What is 234C? Where advance tax is paid, but the installment, but the amount paid is less than the installment due. This is not applicable where the shortfall or underestimation or failure to estimate is on the 4 income. What are the 4 income? We have already spoken about 2: casual capital gain, casual income. PGPP, if they are computing it for the first time, there may be a failure, and yes, we will give an exemption for that. The first case is dividend in aggregate of 10 lakhs received during the previous year. Okay. However, the assessee should have paid the whole of the amount of income tax in the remaining installments which are due, or where no installments are due, by 31st March 2000, by 31st March of every financial year. This is what is advance tax provisions. Now comes TDS, the chapter which confuses everyone. Okay, so we are going to cut this short and study. I have given all the sections over here. So it is starting with 192. 192, first you are entering into a company, you are getting salaries. Okay, so 192 salary, it depends on your slab rate. If you are an individual, the individual slab rate will come. If you are a senior citizen, the senior citizen income tax slab rate. We'll be studying the first chapter, that will fall into place. This is to be deducted at the time of paying the salary. Okay, so 192 is simple. 192A, after you are being in employment for a time, you'll have PF amount. If you're withdrawing it premature, that is before it is due, this comes into play. The slab rate is 10%. The amount should be greater than or equal to 50,000. So there are only 3 places where TDS section talks about greater than or equal to. One such place is PF amount. Okay, so 2 sections of a salary, that's done. Now we are coming into interest. All forms of income only will be studying. So first salary, next comes interest. Interest is dealt in section 194A. When is interest payable? 10% TDS rate is. What is the amount? 5,000, 10,000, 50,000. What do you mean by 5,000, 10,000, 50,000? Okay, what do you mean by 5,000, 10,000 and 50,000? 5,000 means the amount of interest exceeds 5,000. Okay. What do you mean by 10,000? In case of time deposit, which is in bank, the interest has to exceed 10,000 to attract TDS. In case of senior citizen, the time deposit should be more than or equal, should be more than 50,000 to attract TDS. Okay, so 194A interest, 192 salary, 192A PF, 194A interest. 194B talks about casual income. The tax percentage is 30%. The minimum amount is more than 10,000. 194BB is horse races, same 30% more than 10,000. 194C. So now 2 things are gone: salary, PF amount, interest, casual income, horse race. Done. 194C talks about contract payment. It is given that 1% or 2%. 1% in case of individual, 2% in case of persons other than individual. The amount in a single transaction should be more than 30,000, or if you take the whole year, the amount should be greater than more than 1 lakh. Okay, from a single person. 194D talks about insurance commission. Insurance commission, the percentage is 5% and the limit is greater than 15,000. 194DA talks about life insurance maturity. So this is a lump sum amount which you are taking. The amount is 1%. It should be greater than or equal to 1 lakh. So this is second place where equal to is coming. First place is PF amount. Second place is life insurance maturity. So that is also premature thing. This is also on maturity. Okay, 194E talks about non-resident sportsman. 194E talks about non-resident sportsman. Okay, what is the amount? Amount is 20.8%. Why it is 20.8%? This is including cess. Okay, then the limit is only if payment is 20.8%. This is 20.8%, which is 20% plus 4% cess. In case if the income is exceeding 50 crores or 1 crore, 50 lakhs or 1 crore, then surcharge will also be applicable over and above this rate. Okay, income received by a non-resident sportsman. So what and all is covered? Participation in a game or sports is covered. Advertisement is covered. Contribution of articles relating to any game or sport in India in newspaper, magazine, everything is covered. What is not covered? Games like crossword, puzzles, horse race, these things are not included. Okay, non-resident is done. Now 144G, commission on sale of lottery ticket, 5% more than 15,000. Commission or brokerage, 5% more than 15,000. 194I rent. Now rent comes in account. First is rent of immovable property. It is 10% or 2%. Okay. 194I talks about rent. 10%, 2% in case if you rent plant and machinery, 10% in case if you rent land and building. The amount, the limit is 1,80,000. Okay. Okay. Now 194IA purchase of immovable property. Okay, purchase, you're not taking it on rent. Purchase of immobile property, the TDS percentage is 1%. The limit should be, immobile property, so the limit is higher, greater than or equal to 50 lakh. So there are three places where equal to is used. One place is PF amount where greater than equal to 50,000. Second place is life maturity greater than equal to 1 lakh. Third place is immobile property greater than equal to 50 lakhs. Okay, 194 IB talks about TDS on rent paid on immobile property. So this is rent on immobile property. Okay, the rent paid should exceed 50,000 per month or part of a month. Okay, 5% income. If PAN is not there, 20% income to be given. 194 IC talks about any person paying to a resident any consideration under a specified agreement. Okay, the TDS is 10%. This section refers to TDS payments covered under joint development agreements, covered under section 45 subsection 5A of capital gains. Okay, so this is a specified section, you just have to remember it the way it is. 194J talks about professional fees or director fees. The percentage is 10%. This is the professional charges. The limit is greater than 30,000. No limit is specified, for a year. So when it crosses 30,000 itself, the TDS comes into play. Then 194 LA, compensation from government. Minimum you should receive 2.5 lakhs. So more than 2.5 lakh, you have to pay TDS of about 10%. So mostly it is 10%, 1%, 5%, 30%. Late filing of TDS return, you have to pay penalty of rupees 200 per day subject to maximum under section 234E. Failure to deposit TDS, it is 1% or 1.5%. 1% is failure to detect TDS. If you fail to deposit, it is 1.5% per month or part of a month. This is what TDS is. I have also attached a handwritten notes which summarizes the limit, percentage, everything. So let's summarize it. 192 salary, 192A PF amount premature withdrawal, 194A interest, 194B casual income, 194BB horse race, 194C contract, 194D insurance commission. Okay, casual income, and then you are getting income from insurance. So commission first and then maturity. DA is life insurance maturity. 194E non-resident. 194G commission on sale of lottery. 194H commission or brokerage generally. 194I rent. IA purchase of immobile property. IB payment of rent of immobile property. 194 IC payment under specified agreement, which comes under this joint development agreement. 194J professional service. 194 LA compensation from government. Okay, so if you see, there are three sections which has greater than equal to, we have said about it. And how many section has 10%? PF has 10%. How many has 10%? PF has 10%. Interest has 10%. Professional income, professional fees has 10%. Compensation from government has 10%. Specified agreement has 10%. 5 things have 10%. Okay, I'll be circulating a written note which will have all these percentage. Okay, now TCS. Let's go to TCS. What do you mean by TCS? TCS is termed as tax collected at source. Okay, tax collected at source means collection of tax at source at prescribed rate by the seller from the buyer of certain specified goods, service or motor vehicle. They are classifying it into 3. Goods, services, motor vehicle is a separate category by which you have separate percentage. In TCS, all you have to memorize is only the section and the percentage it is applicable. Okay, so if you see goods specified, I have written MAST 3. What do you mean by MAST 3? You just have to remember. M stands for minerals, being coal or lignite or iron ore. So it is just a mnemonic to remember the whole thing. A stands for alcoholic liquor for human consumption. Another A stands for any other forest produce not being timber. The T cube stands for tendu leaves, timber obtained under a forest lease, timber obtained from any mode other than C, other than for lease. So first M, mineral, 1%. Second is A, any other, 1%. Alcoholic liquor, 1%. So Ma is 1%. Just remember, mother always has in first place, has the first place in our heart. So Ma is 1%. Then comes yes. What is yes? Scrap. That is also 1%. Now only the T3 has different percentage. What is 3T3? Tendu leaves, timber obtained under forest lease, timber obtained under any other mode. Okay, tendu leaf is 5%. Timber, the two timbers are 2.5%. Okay. Now there is one mistake. MA is only 1%. The another A, any other, is also 2.5%. Okay, I have missed that point. So this is TCS percentage. Let's come once again. MAST, MAAST3. M stands for mineral, 1%. A stands for alcoholic liquor for human consumption, 1%. Any other forest, 2.5%. S scrap, 1%. T3. T3 stands for tendu leaves, timber obtained from the forest leaf, timber obtained by any other mode. Tendu leaf 5%, timber is 2.5%, timber any other mode is also 2.5%. Now non-applicability of TCS, which is not applicable. All the goods specified under above, which is used in manufacturing, processing or producing articles or generation of power and not for trading purpose. In that case, TDS is not applicable on them. In case of toll plaza, parking lot and mine, the TCS percentage is 2%. And for motor vehicle, it is about 1% of sales consideration, which is to be collected at the time of receipt of amount. Only this is there in TCS. Okay, in motor vehicle there are certain other provisions which says TCS is applicable only at retail level and not on sale of motor vehicle by manufacturer to dealers. TCS is applicable on sale of any motor vehicle of the value exceeding 10 lakh. Okay, it is applicable on each sale of motor vehicle and not on aggregate. The above provision are applicable where the payment is made in cash or by any other mode. The person who are subject to the audit under 44AB, their TCS is 1%. Okay. Now comes the last provision, assessment procedure. In assessment procedure, you just have to remember the days. So 139.1 talks about due date for filing return. Due date for filing return is what I have given: 30th November, September, July. 30th number is for having transfer pricing. If you see the other column, I have given for whom and all it is. So 30th November transfer pricing, 30th September company, 30th September 44AB person, 30th September working partner who is covered under section 44AB. Any other SSC, it is 35 July. You have to see it in this sense. 234F talks about late fee for delay in filing return on income. It's 5,000, 10,000, 1,000. 5,000 is persons who file return of income before 31st December. In any other cases, it is 10,000. For income less than 5 lakh, it is 1,000. Again, I am repeating, 234F talks about late fee for delay in filing return of income. It is 5,000, 10,000, 1,000. If you are filing it before 31st December, it is 5,000. If you file in any other cases that is above the 31st December, it is 10,000. In case if your income is less than 5 lakhs, it is 1,000. 139.4 belated return, 139.5 revised return. You can revise a return how many ever times you want. So belated return, what is the time limit? End of the relevant assessment year or completion of assessment, whichever is earlier. The same case is for revised return. 139AA, this is a very important section, quoting of Aadhaar number. It is really mandatory. You have to quote Aadhaar number in 2 documents, PAN or PAN application and return of income. 139AA talks about quoting of Aadhaar. 140 talks about who shall verify the return. This is a simple section where it says in case of individual, he have to verify. In his absence, some other representative who's authorized is verified. In case of HUF, Katta has to verify. If Katta is not there, any adult person can verify. In case of company, MD has to verify. If MD is not there, the other director has to verify. So that is only that. Then defective return intimation should be given within 15 days. Now there is one more thing which we have to read. Permanent account number, PAN. PAN is required for the following purpose. For what all purpose? There are about 8 purposes. Unit of mutual fund exceeding 50,000, shares in a company exceeding 2 lakh, sale or purchase of any immovable property exceeding 10 lakh, sale or purchase of motor vehicle other than two-wheeler, making an application for issue of credit card or debit card, opening a demat account, cash deposit exceeding 50,000 with the bank, time deposit with the bank or a post office exceeding 50,000 or aggregate exceeding rupees 5 lakh during a year. Okay, I mean time deposit with the bank is 50,000, post office deposit is 5 lakh. Okay, so all the three chapters are done. I'll be uploading the notes and the additional notes which is required for the same, that is handwritten notes. Okay, all the best guys. So if you have any doubts, you can give the feedback in the comment column, and you can also join in the WhatsApp group. Thank you, all the best.